Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, senior technical analyst with Market Rebellion, and this is a one-year daily candle chart of IWM. That's the Russell 2000 ETF. And as I zoom in here, you'll see that we have a very slight bullish engulfing candle there after a hammer pattern yesterday. This is all happening on a drop in volume on the way down. That is bullish because it tells us that the sellers are losing momentum. As I go down the chart, you can see that the stochastics down there crossed with a buy signal on Wednesday, and today the CCI is moving back up with this positive divergence right here. So what does that mean for next week? Well, I'm going to erase all my zip lines as we've already hit those targets. Today is the first day of what is known as the year-end rally or the Santa Claus Rally. It's a 7-day window where the last 5 trading days of the year combined with the first 2 trading days of the new year makes up that 7-day window. And according to the Trader's Almanac, we're looking at a 1.3 or 1.4% rally during that 7-day window. Now, that is not moving back into a bull market by any stretch. This is a very slight rally that we're expecting right up until the end of the year and again into the first week of January. Now, if I zoom in a little bit more, I'm going to draw my zip line there, and you can see that I'm just going up just a slight bit to test the highs from Wednesday. So the target on IWM is going to be 176.12, 176.12 for next week. Keep in mind, Wednesday we will not be having a midweek report. We're having a special event with Charles Payne from Fox Business, and we're going to be on that one right after the close. So stay tuned for that. If I go to the Qs, taking a look at QQQ, you'll see that we did not yet hit that upside target, but we made an attempt on Wednesday. This is not a bullish engulfing. That is, again, very, very slight shadow underneath there after a hammer pattern yesterday. And so I believe that because of the drop in volume on the way down, this will start to move up. However, I'm going to have to lower that target right there because originally I had that target set at the 20-period moving average. If we get that year-end rally like I'm expecting, remember this moving average is starting to move lower as the price is drawing it to the lower levels. So that upside target for QQQ is 273.39. Look down below. The CCI is just a hair away from a buy signal there, and so is the stochastic. So again, I expect higher prices. Again, very slight. I wouldn't get crazy and start selling everything to buy stocks, right? So be careful of that. DIA, looking at this, we hit the target this week. That was a nice one. Zooming in a little bit more, you can see that we have a bullish engulfing right there. I think we're going to get a slight rally again up towards that moving average. So upside target for next week is 334.37. We have the same story on the technicals. Looking back at the stochastics here, we have a cross there. We have a pivot on the CCI, drop in volume as the markets are just hovering around this low area here. And we have a very slight gap above the market that will help draw the price up. So that is DIA. Looking at the spiders, we hit the target on this one as well. We have a bullish engulfing right there. Now that we have that gap fill to the left filled, we're going to move that back up just like the rest of the markets. I'm going slight to that 386.71, 386.71 on the spiders. Same story. Oscillators are crossing, moving up. Gaps above the market. That is bullish. Now, the VIX, at first it didn't look like we were going to hit that target until yesterday. And this was a 2-part forecast. It's hard to see that. Let me zoom in. You see the zip line to the downside was my original forecast that the VIX would drop, and then I said it would pivot and go up. That's exactly what has happened. So I'm going to erase that forecast now that that's hit. I'll erase that one. Now that's hit. And I think because the rest of the markets are expected to go up slightly, I think the VIX is going to turn lower to test that support level down there. So I'm expecting the VIX to drop to $20 So option traders, keep that in mind as we do our webinar on Monday. I'm going to be talking a lot more about that and how we will position ourselves. By the way, I want to thank each and every one of you for liking and sharing and commenting. That's really helping us grow the channel. And the algorithm that YouTube uses really relies on the comments and the sharing. And so I continue to ask people to do that. And I thank you for it because it really helps us spread the word about technical analysis. Now, let's go to the geopolitical news. The big news this week is that the omnibus bill is passing. It's passed the House, the Senate. It's on its way to be signed at the executive branch level. This is $1.7 trillion of federal spending. Now, keep this in mind, folks. Most Americans are not in favor of this bill passing. There is so much pork in here. Over 4,000 pages of this document was put out, and I don't believe there was a single representative that actually read it. In the bill here, you can see that there's roughly $45 billion in emergency assistance to Ukraine and NATO. What does that mean? It means that they're going to continue to fund this war. In my opinion, I believe this is one big fat money laundering operation. And I believe that Americans are starting to wake up to the fact that that is true. We have open borders to the south, and we're spending billions on other countries to secure their borders. And I think Americans are getting sick and tired of that because you got to remember that as our southern border is wide open, as people come over, they're taking advantage of the social programs, at which time we, the taxpayers, are going to be footing the bill. And that's not going to be helping our economy one little bit. In fact, this will most likely cause the economy to implode. So that is what I'm talking about in 2023. I keep telling people what you're going to see may shock you. I keep telling people that in an effort to maybe desensitize them, but that's the way I see it. The other part of this is President Xi Jinping in China is making a move. It's a very proactive move to replace the U.S. petrodollar with the yuan. I do believe they're going to be pulling that off, so keep an eye on China. I tell people, keep your eyes on China, not so much on the Ukraine. Keep your eyes on China because they are also campaigning heavily to get other nations to join the BRICS bloc. You know, this is one of the clearest trends in the world this year as we are seeing an accelerating shift in global economic power to the east. And the Americans and the Western countries and Canada and North America and such are doing nothing to offset this. They're making it worse. We're going more into debt. We're not even moving to support our dollar. The dollar is crashing. We've seen that over the past few weeks, especially. And so this is the biggest threat that no one's talking about. And I think this is going to be, again, another catalyst that drives our markets to the much lower levels. I'm being conservative when I say we're going to hit the March 2020 lows across the board. I think that's a conservative estimate. Now, if you look at the housing permits, they're down 22% year over year. This is a leading economic indicator. And if you look at Bloomberg, I was very happy to see that they are absolutely identifying the fact that the S&P is still in a downward trend, and we're pulling back from that trend line. You don't see that too often. I talk about it most often, but the press doesn't seem to pick up on those technical signals. I'm very happy Bloomberg did. This is an interesting season for the holiday shoppers, not looking that great for the retailers. This came out on the 19th. Through Yahoo Finance, and this is going to be something I think they're going to be talking about right through the Christmas season and into the new year. So keep an eye on some of those retail numbers. BlackRock, holy mackerel, look what they're coming out with. They're putting out a warning telling investors to throw out their old investment playbook and that we're headed for a new regime of greater macro and market volatility. BlackRock is the largest investment company in the world, and they have to report to their shareholders. So they're not going to be buying into the narratives that you see on the financial programs and some of the cable channels. They have to report what they see. This is what they see. I agree with what they're seeing. And I think that we're going to have a rough road ahead for the buy and hold investors. For our option traders, we're doing absolutely phenomenally well. We're positioned for a downturn. We have put spreads. If you want to learn more about that, go to Market Rebellion. ping them. You'll see at the end of this video, there's a link. And my email is at the end, so you can send any messages you like to inquire about the services that I offer. And we're having a great time, folks. And my goal is to invite more people into 2023 with us in these option strategies. Now, again, according to the Trader's Almanac, the Santa Claus Rally is something that is common. It's a very common pattern where 1.3% gain or possibly 1.4% gain is what we see on average. I think that we will see that. But again, this doesn't mean put on your bullhorns. We were down more than that in yesterday's trading session. So you have to understand that while this is being talked about quite a bit, it doesn't mean that we're going to be hitting home runs over the fence by buying and holding and trading in this 7-day period. In fact, I look at it as an opportunity to go out there and take new short positions. That's totally up to you. I'm not telling you how to trade, but I'm looking forward to a down market and preparing for it. That is how we are setting up our trading strategies. So with that, I'd like to wish each and every one of you a Merry Christmas. I'm looking forward to speaking with you next Friday. I'll be putting out that weekly market report. Again, stay tuned to the end so you can stay connected to Market Rebellion and trade with the rest of the rebels. Take care.
Thank you for watching AJ Monty's weekly market report. Did you know AJ Monty has 4 services here at Market Rebellion, as well as one-on-one coaching and mentorships? Please give us a call to learn more about all of our services here at Market Rebellion, or email aj@marketrebellion.com.